Silver remains the only one of all of those metals that is below its 1980 high. So silver is cheap on that basis. It's cheap on an inflationary adjusted price basis.
So, obviously you're quite focused on silver and, being probably one of those alternative assets that you just mentioned. So why do you see silver really as a generational opportunity?
So for a couple of reasons. I mean, if you look at how undervalued silver is, I think that's an important point to be made. If you look at the highs that were clocked by most metals, precious metals, platinum group metals, base metals in 1980. Mm-hmm. So we're talking several decades ago, and when silver and gold both peaked. Silver remains the only one of all of those metals that is below its 1980 high. So silver is cheap on that basis. It's cheap on an inflationary adjusted price basis. And if you look at what happened in the 1970s, gold was up 14 times, so 1,400%, and silver was up 37 times, so 3,700%. And I think that we're in an environment that's similar to the 1970s. Not exact. I don't think, history repeats exactly. It certainly rhymes. And some of the differences are that in the 1970s, the debt to GDP ratio in the US, for example, was about 35%. So much, much lower debt levels. Today, it's at 130%. So to think that, central banks can raise rates, that speaks to what I was saying earlier. To think that they can raise rates enough to actually dent inflation, I think is pie in the sky. That simply will not happen. Inflation will run. People will have to get used to it. And it's unfortunate because if you look at what inflation does to your buying power, I think it's at 5.4% inflation over about 6 or 7 years, you'll lose 40% of your buying power. So $100 is worth $60 in about 6 or 7 years. And that's at 5.4%. We're running 8.5% in the US right now. So people really, really need to wake up to inflation, what it does to your investments. And they really, if they don't want their retirement to be stolen by inflation, they need to look at proven hedges like silver that, as I say, have proven themselves over decades and even millennia.
Mm-hmm. So, why do you think it is that silver, as you mentioned, is the only commodity that is trading below its 1980 high? And couldn't the argument be made that 1980 high was a bit of an anomaly?
So yes, that I would agree that there are certainly some factors that pushed silver probably exceptionally high. What I do talk about in the book being the silver squeeze that came from the Hunt brothers, and that was it reminds me a little bit of kind of what took place last year, end of January when we had the silver squeeze. That took place because of social media, a big social media drive. But silver is certainly used in a lot of applications. It's crucial to industry, and it has proven itself as money, as an inflation hedge and value protection over years. But silver is a much smaller market than gold. And that's something else that I talk about in the book. And it being such a small market, it doesn't get the attention that gold gets. It's about 1/10 the size of the gold market. If you look on a supply basis every year, gold being about, I think it's 270 billion, silver being worth about 27 billion annually. So silver being such a small market versus gold, it means that silver tends to be a lot more volatile. Mm-hmm. It actually does outpace gold's returns in bull markets. And so you definitely want exposure to silver. And it tends to outpace gold bull markets or precious metals. It tends to perform well and outpace gold and precious metals bull markets in the latter half of those markets. And so it's, as I say, it's definitely a metal that you want exposure to. You may want to do so in a maybe more limited way because of its volatility, but the volatility should not be, in my view, something that any investor would want to use as a reason to not participate in silver investing.
So you had mentioned that it really tends to outperform gold in the latter stages of a bull market. Why is that, Peter?
So yeah, again, another sort of quirky aspect, but silver being again a much smaller market than gold. If you look at what's taken place previously, is that gold gets most of the attention. It starts to build up. It's the sort of the better known hedge, so to speak. It's the go-to initially, at least. And so people often are late to the party. They'll see gold go up. Let's say gold is right now around close to 1900. Once it passes 2000 and continues to climb, let's say gold, goes up. I'm not even going to make a prediction right now, but several times, let's say higher even than it is currently. It's certain that it's going to attract a lot of attention. And if people see gold at multiple thousands of dollars per ounce, they're going to feel like they've missed that opportunity. They're going to look for alternatives. Silver naturally becomes that alternative. They'll see it at a much lower price per ounce and feel like, okay, silver has been rising as well, but I can get a lot more ounces per dollar for silver than I can for gold. I'm going to buy some silver. And it's a much smaller market, as I alluded to earlier, and that just sort of feeds on itself and pushes silver up dramatically. Again, as I say, in the latter stages of a precious metals bull market.
So, is the gold to silver ratio informative to you, and how low do you expect it to get?
So, I mean, yes, it certainly is informative. It's not a perfect indicator, but over time it is very useful. The average, say over the past maybe 40, 50 years or so, is about 55 to 60 ounces of silver per ounce of gold. Right now we're trading at about 80, which is, interestingly enough, a level at which it tends to peak. So it has peaked higher, that's for sure. But if you look, again, as I say, over the past 40 to 50 years or so, the ratio peaks typically around 80. And at that point, when the ratio starts to fall, that's when, in fact, both gold and silver start to rise, but silver rises at a faster pace and starts outpacing gold. So when you see the ratio at 80 and then start to fall, that's when you really want to start paying a lot of attention to silver and look to perhaps accumulate silver. Especially if you see that it's in a rising environment, it starts to rally. Where have I seen it in the past? Well, the ratio bottomed in 1980 at 15. That was when silver reached $50 and gold reached $850. And then after that, the next low came in 2011 when silver bottomed at 30. Gold hadn't quite peaked yet, but was on its way to 1900. And I think that we really should look for a new low ultimately in this bull market. I'm not necessarily expecting 15, but I do think we're going to see 30, perhaps below 30. But that's where I think we should really look for a clear sign that perhaps silver has even peaked if we see it somewhere at or below 30.